Here's the problem. Most people use just a gut feel to try to predict where the Bitcoin price is going. But what I think is way better than just reading the news or trying to guesstimate what's happening is to use quantitative approaches. Now, no model works perfectly, but some are useful. And in this video, we are going to look at various models. I'm going to explain what they mean, and we're going to combine all of those models into one single aggregate model. And again, the reason why we do this is to take away emotions out of the equation. We want to trade based on something that approximates objectivity. Now, let's start off with this aggregate metric. This is the CBBI. So feel free to Google this. It's the Bitcoin Bull Run Index by Colin Talks Crypto, an indicator that hovers between 0 and 100. And whenever we are low, we should be buying Bitcoin. Whenever we are high, we should tend to sell Bitcoin. And so historically, this worked very, very well, right? Historically, we tended to buy bottoms to then afterwards sell the top, to buy the bottom again, to sell the top, etc. And currently, we are rather on the higher end. We are not yet at 100, but we are on the higher end. Now, what is this CBBI? It's a combination indicator of various mathematical models. And we're going to look at every single one of those models in this video. How well did these models individually work and what are they predicting? Let's start off with the first one. So that's the Pi Cycle top indicator, which is this indicator over here. It consists of two moving averages, namely the 111-day moving average and the 2 times 350-day moving average. Now, the ratio between those two moving averages equals pi, and that's why it's called the Pi Cycle top indicator. And the reason why it's so interesting is it predicts the top whenever those moving averages cross, and it had been developed when the cycle top in 2018 already happened. But here's what's noteworthy. The top over here in 2021 was predicted. It was not a top that was included in the data due to data fitting, right? That's the fitting in all those prior tops. This here was predicted, and it predicted the cycle top quite exactly on the 13th of April 2021. Yes, we saw a slightly higher top subsequently as well, but still historically this was a pretty good indicator. And again, if we would now see the 111-day moving average crossing that 2 times 350-day moving average, we'd get another sell signal. Right now, we are very far away from that. And so that's why currently, when we only select the Pi Cycle top indicator for the CBBI, we are not yet at 100. How well does this indicator work? What does it measure? It basically measures the momentum, right? When we are accelerating and when we are running too long in a bull cycle, then we should be selling, because at some point the momentum should be stopping, should be turning around. It's basically an attempt to measure how heated a market can become. If a bull market lasts for too long and is too fast, it's time to sell. And according to the Pi Cycle, we are heated, but we are not yet at extreme values. The next indicator is the realized and not unrealized profit and loss. Now, this is a very useful indicator. It's shown in a slightly different way over here. The market is currently at 55% net unrealized profit. So the market participant that currently holds Bitcoin on average should be 55% in profit. Now, why is this so important? It's important because where currently the price is relative to our entry position is always a relevant anchor point, right? When we are currently 2, 3, 4, 5x in profit, we might consider taking that profit. If we are currently in losses by 20, 30, 40%, we might keep on holding Bitcoin if we believe in Bitcoin long term, right? If we believe that long term Bitcoin will outperform fiat. And so when the market currently is in losses, we should be buying, because then the selling pressure subsides. When the market is currently massively in gains, we might consider taking some of those gains. And so again, currently the market is in profit, not historically high profit. So we have seen more than 100% profit peaks in the past, but the market is definitely also not in losses, right? That's when this blue line is in the green. And so it is interesting how those very different indicators that measure different things still show similar time frames for buying and selling. What we've got over here is the realized HODL ratio, and that is currently very high. And here's another way to look at this indicator. Now, what does this do? It is an on-chain indicator. It looks at the trading activity between the long-term holders and the short-term holders. So for the realized hodl ratio, that's the 1 to 2 year wallets versus the 1 to 2 week wallets. If there is a lot of speculation across the 1 to 2 week wallets, then potentially the market is heated. When the trading volume is mainly done by the long-term holders and the short-term holders have pretty much exited the market, then this indicator is low, and that's when we should be buying. And we are again not at super heated levels, but we are rather on the expensive than on the cheap side. And surprise, surprise, the time when to buy and when to sell matches pretty much with those other indicators that in theory measure something different, right? It's simply the result that's similar, but the thing that's measured is not the same. Up to the next indicator, the Puell multiple. The Puell multiple tries to approximate how profitable the miners are. So it looks at the average mining revenue in the last 365 years, and it takes the current issuance of Bitcoin, today's issuance, in relation to that revenue. When miners are very, very profitable, that's the time to potentially get out. When miners are capitulating, when they're not making money, that's time to get in. Now, currently, we are somewhat balanced on that. Miners are not having a blast, but miners are also not capitulating. Now, there's also the 2-year moving average. Probably the delta from the 2-year, whenever we are below, we might want to buy. Whenever we are above by a certain percentage, we might want to sell. And here's the Bitcoin price with that moving average. Now, I personally do not like that indicator that much because it's not the best moving average. I've talked about this several times on this channel. The best moving average to time Bitcoin is the 120-day. And we want to use that moving average in a way that we buy whenever the price is above and we sell whenever the price is below. When we backtest Bitcoin's history and we look at what kind of moving average duration works the best, the 120-day is by far beating everything else. I do not know why the CBBI has the 2-year moving average included, but I don't think it's the best measure out there. Some people instead use the 4-year moving average because in the past Bitcoin's price never fell below the 4-year up until recently. That was theorized because every 4 years the supply of Bitcoin gets cut in half, but then in the last years we did see the price go below. So I think that the validity of the 4-year or of the 2-year moving average is probably not that high going forward. I don't think that the long-term price momentum in the past is representative of what the price momentum will be in the future. For medium-term trading for 3 or 4 months, it's probably similar, but when we look at several years, there's simply too much change in Bitcoin's volatility over that time, right? In the early days, Bitcoin was way more volatile because the prices were lower, the market cap was lower. It didn't take that much money to move Bitcoin. Now the volatility is comparatively muted. Now here's something I did not know before starting this video: the Bitcoin Trollolo trend line. Now apparently that's simply some kind of regression, some kind of a trend chart. There are other similar approaches, for example the Bitcoin rainbow chart, and they might help to a degree to see if we are really extremely depressed, but it is not necessarily the best approach to time the tops because one might end up not selling at the top. For example, over here in 2021, you would have not sold, right? You would have waited for Bitcoin to reach maybe 130 or 170K, which never happened. So I believe that a lot of those approaches overestimate the growth of Bitcoin. Initially, Bitcoin grew faster than it does now, again, because the market cap increases over time. According to the CBBI, we are now at 60% in the Trollolo line. In other words, we should also rather consider selling, but there is potential more upside. But again, we're looking at different metrics. No model is perfect, but some are useful. Here is a very useful model in my perspective: the market value to realized value Z-score, also shown over here. What is this? It looks at how much is the market currently in profit relative to the average cost basis, and how much is that profit as a fraction of the current volatility. So we look at how much as a fraction of the current volatility. So first of all, we of course check, are we in losses or in profit? When we are in profit, we want to know, is that profit a lot relative to how much the price is moving up or down? If there is a lot of volatility anyways, then it's okay if we temporarily see very high prices. If the volatility is very small and we are very high in profit, then we should be taking profit earlier. That's the idea. And again, this indicator tended to work pretty well in the past. It also went into the red in Q1 of 2021 when Bitcoin's price was at around 60K. Currently, we are not in the red, but we are also not in the green. We are somewhere in the middle. Two more models, and subsequently, I'm going to pick the ones that I like the best and combine them. And let's see where that modified BBBI will bring us. Let's first go with the reserve risk. The reserve risk is this line here at the bottom in orange. Whenever it's low, we should be buying. Whenever it's high, we should be selling. Unfortunately, with this indicator, we see how over time the tops tend to decline. In other words, this did not turn red in Q1 of 2021. We would have not sold had we used this indicator. We would have bought, of course, but even when we moved from 20K to 16K, we might have panicked because then we moved lower than whatever the reserve risk has shown us in the past. And so I think this indicator does not perfectly reflect the bottoms and the tops of the trading range. It tends to overestimate again Bitcoin's growth over time. The next cycle top is unlikely going to be in the red area, and the next bottom is likely going to be much lower compared to what we saw at the end of 2022. The calculation is rather complex. It itself includes all kinds of other sub-metrics. Bitcoin days destroyed, so this is how much long-term whales are potentially selling. Value days destroyed, so this is the Bitcoin destroyed times the money that was moved, so the price of Bitcoin, and all kinds of other metrics. So this is a relatively complex indicator in itself, which I believe doesn't really present the best buying and selling signals. Again, because long term there is a trending direction and there's no adjustment for that. Last indicator, the Wu Bull top caps versus the CVDD. So CVDD means coin value days destroyed. When you've got, say, 10 Bitcoin and you don't move them for 1 year, and after 1 year you decide to move the Bitcoin, then you are destroying 10 times 365 days. So the more Bitcoin you have and the longer it was dormant, if you then decide to move the Bitcoin, then you're destroying those days. And so we can see when the long-term holders are taking profit, that's when the CVDD is going up. And when the long-term holders simply just tend to hold, that's when the increase is much smaller. And it seems like over time, this is a very good indicator to look at potential bottoms in the market. Every time in Bitcoin's history, we tended to bottom out at the CVDD. Currently, the price is only at $31,000. Not necessarily something too optimistic, but still, I do believe this is a very reliable indicator. Now let's combine what I believe are the best of the indicators into a modified CBBI. The Pi Cycle top indicator is a backfitted indicator, and it did do one very nice prediction. Will it work in the future? I'm not so sure. But since it made one very nice call to the exact day when the cycle peaked, namely over here, I think it's still worth including in our CBBI. So that gets a tick. The net unrealized profit and loss also gets a tick because this has also a psychological underpinning, right? I talked about the reference price that every one of us has. I'm split regarding the realized hodl ratio because over here, the tops also tend to decline over time, and it did not give us a selling indication when Bitcoin got into the 60K mark before then coming down to 16K. So a drop of 75% without us having ever given a selling opportunity. Now we are at very similar levels again. So in theory, it's a nice metric. It shows us how much speculation there is in the market. It puts those short-term trading in relation to the long-term trading. It measures something different. But again, since this didn't work that well in the last cycle, I don't think it's the best to include this as well. It will probably give us an indication to still hold when we should not hold, right? I do not want to be part of a crash like this this. The rodel ratio would have let us ride this crash, unfortunately. So no tick over here. The Puel multiple also tends to not work that well. It's very erratic, and I'm personally not mining any Bitcoin, so I included the 2-year moving average is also not ideal, right? I prefer the 120-day simple moving average for timing the medium term. The Bitcoin Trololo line is also questionable, again, because a lot of those regression approximations tend to overestimate how quickly Bitcoin can go up during a cycle. Most people that used approaches like this did not take adequate profit in 2021, so no tick from me. The market value to realized value Z-score is super useful. This did peak nicely in the prior bull run as well. It also times the bottoms extremely well. It also gave us a buying signal during the COVID crash, and so this definitely gets included as well. Reserve risk does not get included because, again, the peaks tend to go down over time, so there's no real adjustment that would normalize this indicator. And then we've got the Wu Bull top cap versus CVDD. The CVDD is a very nice bottom indicator, and so this does get my support. And so this is then the adjusted CBBI index. Whenever we are below 20, we should be buying. So then we would have also bought during the COVID crash. Whenever we reach the 70 mark, we have to be prepared for potentially large corrections. So Bitcoin's price went from 13K all the way down to 5K during COVID. And even though COVID was a black swan event, it still shows us it's better to at least sometimes take some chips off the table. Of course, when we are at 100, we should definitely be exiting. And so the best approach is probably some kind of layered approach, right? Because we never really know exactly where the price is going. We just know if the market is currently heated or not. So when we hit, say, 70 on such an index, we might make a first sale. When we then hit 80, we make a second sale. When we then hit 90, another one, and when we are at 100, we only hold a very, very small fraction of Bitcoin, just to diversify away from all the other assets that we are holding. And so this would tell us, since we are currently at 76, that we might take some chips off the table, or at least that we might want to have a pretty close stop loss if we are now exposed. This is actually what I'm currently doing. I've just talked about the 120-day simple moving average, right? How historically it's the best to time the medium term. And I am currently very much exposed to Bitcoin, but I do have my stop loss at the 120-day SMA. If Bitcoin is going to fall and it's not making a bounce to bring us to new heights, but it's going to fall below $91,000 with the tendency of this number, of course, going up, then I am exiting. So I'm betting on the positive momentum. I'm betting currently that we are going to continue our merry way up. And I do believe that the CBBI might go higher. But if that's not the case, then I am exiting very, very quickly as well. I am aware of the fact that there is a lot of volatility in Bitcoin's price, and I do not want to be in the market when the price corrects by 76%, for example. Making money in crypto is all about risk management, right? It's all about the long run. It's of course also about taking opportunities, but that has to be done wisely, right? We don't want to bet half of our portfolio on a meme coin that can go down by 60-70%. We want to ride the momentum while it lasts. We want to buy when prices still trend upwards, but we do this with the knowledge that at any point in time things can turn around very, very quickly, and then it makes sense to not look back, to simply just take that money and then potentially use other strategies, right? Like betting on falling prices of altcoins, for example. There are plenty of similar videos, tutorial videos, risk management videos, macro videos in the premium membership of this channel. Feel free to check it out. It's down below, thebitcoinstrategy.com. There's a 7-minute introductory video where everything is explained, what's included in the membership. So feel free to check that out. And of course, if it's your first time here, feel free to subscribe as well. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video, or see you in premium. Cheers.